Time for Hot Picks. Our guest is focused on the basic materials sector. For example, he expects Nutrien will post improved results, and it's his first idea. We're joined by Seth Goldstein, equity strategist at Morningstar. Seth, great to see you. Start off with Nutrien. Why do you see brighter times ahead for this fertilizer giant?
Well, Nutrien is one of the lowest cost potash and nitrogen producers in the world. And we think Nutrien will benefit from rising potash and nitrogen prices, which make up the majority of the company's profits. We also think after a down first quarter in the company's retail business due to delayed U.S. plantings, they should see much improved second quarter results. The stock sold off after the first quarter because of the weak retail results, but we think combined with improving commodity fertilizer prices, namely potash and nitrogen, that should boost fertilizer profits and improved retail profits in the second half of the year, set the company up for a 2025 that will see profits rebound following 2 years of profit declines, and that makes Nutrien one of our top picks in the base material space.
It's interesting, you may have seen that story. Robert F. Kennedy Jr. is opposed to the use of pesticides. And there's been speculation he might, for atrazine, for example. I'm not even sure if that's a significant product that Nutrien would market through its retail branches. But do you think that could be a threat, tighter regulation of farm chemicals in the United States?
I don't think that's really going to be a threat to Nutrien or really any of the major players in the ag crop chemical space, because all of them, including Nutrien's own proprietary products, are developing new, more environmentally friendly pest control products, namely biologicals, which are a natural way to deal with insects. And with these new products, they would not be subject to the potential bans. What we've seen historically in markets like Europe and Brazil, which have banned the most crop chemicals around the world of any countries or regions, we've seen older crop chemicals that are more environmentally damaging, potentially more human health damaging, become banned. I think those would likely be targeted in the U.S. with potential crop chemical bans, not any of the newer, more premium products. And Nutrien, as a retailer, sells such a wide range of products they could quickly adjust to meet the new regulations without seeing too much of an impact on their results.
Your next idea began apparently as an insecticide producer in 1883. It's but diversified into other chemicals. It's FMC.
Yes, FMC is the crop chemical pure play, and while insecticides are still their main business, they are developing a lot of new products, particularly in herbicides and fungicide. Now, FMC, as a crop chemical pure play, got hit extra hard by the inventory destocking that we saw in 2023 and 2024 as the excess inventory built up during the COVID and supply chain disruptions unwound. And so we've seen profits decline for a couple years. FMC is also exposed to Brazil, where the inventory destocking was particularly harder versus markets like North America and Europe. So FMC underperformed their peers such as Corteva, Bayer, and BASF. However, we think management is going to return the company to growth. They've taken extra inventory destocking in the first half of this year. We expect growth in the second half of 2025 and into 2026, driven by new product launches, namely the biologicals that we were just discussing, also a new type of herbicide that's more environmentally friendly that will deal with weeds that are resistant to traditional crop chemicals. So we think for FMC, their product portfolio positions them for new premium product growth, which is going to be higher revenue growth, higher margin growth, and we're going to see profits rebound starting in the second half of this year.
Yeah, apparently in parts of the U.S. Farm Belt, the weeds are mutating rapidly. They've got this propensity to alter their DNA to avoid pesticides or herbicides. DuPont, the chemical giant as well. We've got a chemical theme here. Why do you see promise in that stock?
Well, with DuPont, we've seen a major sell-off in U.S. chemical producers with DuPont and many of its peers, such as Dow Chemical, Lyondell, et cetera, due to the April 2 tariff fears. Now, many U.S. chemical companies don't have direct exposure to tariffs, but what they sell is chemicals used for products that could be subject to tariffs, or consumers could delay purchases of bigger ticket items. Think of electronics, where DuPont has a lot of exposure. Think of building and construction, new or premium autos. these are end markets for DuPont, and these could get hit hard if consumers, particularly in the U.S., buy fewer goods due to tariff-related inflation. So we do see some economic risk. However, DuPont's a specialty chemical producer. Its chemicals are bought by its customers because they work the best. When a semiconductor producer, for example, buys DuPont's semiconductor production chemicals for a process like lithography, they buy it because DuPont's chemicals work the best and allow the smallest chips to be made that are the most advanced chips in the world. So it's a very premium product. So we don't expect there to be as much of a cyclical economic impact to a specialty producer like DuPont, yet the stock has sold off similar to the commodity chemicals peers. So we see an opportunity for long-term investors for this specialty chemicals company.
Seth, thank you very much indeed for joining us. Seth Goldstein, equity strategist at Morningstar. Coming up, we are